If you think you're ready to buy a home, you're probably closer than you realize to making one of the smartest financial moves you'll ever make. But here's what most people miss. When you actually understand the real cost of owning a home, you don't just avoid mistakes. You put yourself in a position to make a really strong decision. And the people who get this part right, they build wealth, stability, long-term options, all from one purchase. And if we haven't met, I'm Mark, and I help people buy and sell real estate here in the U.S. and connect them with trusted agents globally. I've worked with over 500 families relocating and navigating this process the right way. And if you're thinking about buying here or internationally, just reach out and I'll help you think through it the right way so you don't make a decision that you regret. But what I want to do is I want to go backwards just a little bit for my own personal experience. Back in 1980, we bought our first home. We paid 15% interest at that time, and our apartment rent before we made the purchase was around $350 a month, and the new house payment was going to be $557, and we were asking ourselves, can we make that $200 a month jump? Of course, right now that sounds like nothing, but in 1980, that was a big decision for us. Well, we kept that house for 4 years, and we never regretted making that purchase because that got us started into being able to increase to the next house and then increase to the next house. So the journey was perfectly timed for us, so I hope that it helps you in some way. Now, before you jump in, let's talk about what nobody really understands up front. Most people focus on the price of the home. That's not the real number. The real number is what it actually costs you to own it. And there are two sides to that. What you pay to get in and what it costs you every month thereafter. So let's start up front. First is your down payment. Depending on the loan, you could be putting down anywhere from 3 to 20%. So on a $300,000 home, that's roughly $9,000 on the low end up to $60,000. Now that alone determines what's even realistic for you. But the other thing that catches people off guard is the closing costs. And this is where deals start to feel heavier than expected. You've got the lender's fees, title insurance, legal aspects, all bundled together. So I want you to figure roughly 2 to 6% of the purchase price. So on that same $300,000 home, you might spend another $5,000 to $15,000. Now here's where experience matters. These costs aren't always fixed. Depending on the situation, you can negotiate with the seller to cover part or sometimes a good portion of those expenses. And we're finding in the new construction communities now, a lot of the builders are helping pay for those expenses, especially if the home's been sitting for a while. And this is the part that buyers forget. Sellers are motivated too, and you want to use that to your advantage. And then there's something most people don't plan for at all, and that's reserves. This isn't money you spend. This is money you need to have. Lenders want to know if something goes sideways, are you still okay? So typically that would be about 3 to 6 months of your house payment sitting in the bank. And once you get through that, you're into the ongoing costs. And this is where people either get it right or feel it later. Your mortgage is just one piece. You've got property taxes, which can and will change, insurance, HOA fees in some of the communities. And if you're putting down less, you may have to pay what's called mortgage insurance. And then there's maintenance. And this is the part that renters underestimate. Once you own it, it's all yours. You got your roof, your plumbing, your AC, your appliances. And over time, these costs do add up. So if you're only budgeting for the payment, you're probably already behind. Now, let's talk about the mistake I see all the time. Just because a lender approves you for a number doesn't mean that you should spend it. Banks qualify based on formulas, and they don't factor in your lifestyle. A general rule is to keep your housing costs somewhere around 28% of your income, but lenders will often push that higher. And when you stretch too far, you end up house poor. You've got the house, but no flexibility, and that's not your goal. Smart buyers don't buy the max. They buy what keeps them comfortable. Another one is the loan type. Now, this matters more than most people think. A fixed rate loan gives you stability. Your payment stays consistent. Adjustable rate loans can look attractive up front, but they can change. And if you're not prepared for that adjustment, it can catch up to you. That's why you should always compare the lenders. Even a small difference in a rate can make a big difference over time. And don't just take the first option you're given. Now, let me say this clearly. Don't rush the decision. I've seen buyers make emotional moves because they feel pressure. Family, timing, the market, all of those things. This is too big of a decision for that. Take your time, because once you own it, you own it. And that ties us into something else. Don't fall in love with the house. It sounds harmless, but it's where people make bad decisions. Once emotion takes over, logic goes out the window. And that's when buyers overpay, they ignore issues, or they stretch beyond what makes sense. So treat it like a business decision. Now, here's something I wish more buyers thought about. Your first home doesn't have to be just a home. It can be a strategy. There are opportunities, like multi-unit properties, for example, where you can live in one side and rent the other. That changes the math completely. And in some cases, it puts you ahead a lot faster. Now, the last thing I want to cover here is I want you to do your due diligence. Get a real inspection, not just a surface level look. Look deeper. Mold, termites, plumbing, roof. If you can, see the property during different conditions. Talk to the neighbors. Look at the history of the home. If it's turned over multiple times quickly, there's usually a reason for that. And don't ignore the location. You're not just buying the house. You're buying everything around it. Schools, access, long-term value. All of it matters. Also, understanding the risks specific to the area. Is it in a flood zone? Are there insurance challenges? Anything that can impact you later? Because something that looks like a great deal on paper can turn into a problem if you don't see the full picture. So what's the bottom line? Well, buying a home isn't just about whether you can afford it today. It's about whether it works for you long term. Get it right, and it's one of the best decisions you'll make. Get it wrong, and it can quietly cost you for years. So slow down, ask questions, run the numbers, and think ahead. And if this helped you look at things a little bit differently, share it with someone who's thinking about buying. See you in the next one.